Market fear calms, but sentiment remains fragile. Back up the truck, but be selective. That's the messaging. Welcome to the Daily. My name is Jessica Ramirez, a market strategist here with Mumu. Well, investors have indeed been selectively buying the dip, as you would expect, after we saw US stocks suffer the biggest one-day pullback since August. So dip buying is pretty much leaving the major indices close flat somewhat on Thursday. But remember, we do know that the Fed is pretty much choked sentiment, and sentiment took a big hit with the S&P 500 falling back to where it was 6 weeks ago, and that's pretty much where stocks are still overnight. But yeah, sentiment is fragile, and we do have a very big event occurring in the US tonight with options expiry, but we did have some good news overnight, and that encouraged to see dip buying brought back into the picture. We had stronger than expected economic data coming out from last quarter. We also saw Nike, a consumer bellwether. They delivered good news, less bad than feared results. Nike, importantly, a consumer bellwether for spending, they delivered a turnaround earnings report, and Nike shares jumped 8% after hours. So that is good news for shareholders. But across the ditch, we did see the Bank of England hold interest rates steady, but the narrative does suggest markets could get an early Valentine's Day interest rate cut in February. But although the market's fear is high, we are seeing the fear gauge still hold in levels to where it was around July. But do be mindful, though, that this is pretty much where we start to see some fund managers start to buy the dip. Now, why is that? Well, remember that when fear is high, people are worried about another pullback. That's when you can see opportunities pick up. But I don't think that you should be ruling out another pullback, especially because investors have taken out leveraged positions, as in they've borrowed money to buy into some of this year's biggest momentum stocks. And that basically means that we could see more selling. Now, one investment manager, BTIG, said overnight that the Fed pullback does seem to mark the end of a move lower and not the start of another move. That basically implies the sell-off could be over, while Tom Lee said to back up the truck because we have a buying opportunity in front of us. But I really do think that we need to be mindful and selective. And what I mean by that is if we have a look at stocks that are already down from their highs, or have catalysts to move higher, they're the stocks that are making moves higher right here and now. And that's precisely why we saw Nvidia shares move up 1.4% overnight. Remember, Nvidia's stock is in the midst of a pullback. It's been pulling back since November. We've been covering that lots here at Mumu. I remember that Nvidia shares are down 12% from their highs. Also, we are seeing a dip buying in Palantir. Palantir shares, as we said, they're about to enter the NASDAQ 100, or rather, they were just added to the NASDAQ 100, and Palantir was a strong mover overnight, seeing dip buying, and that pushed their shares up almost 4% higher. Moving to the Australian share market, it's on track to close the week down for 2.4% rather. So that is something to consider. We're back at levels that we were in September now, and the market is down 5% from its high, but we're still holding a gain of almost 7% this year, which means we are on track for our best gain since 2021. But what we're seeing is now the Aussie share market is in technical oversold territory. That suggests that selling could be over for the Aussie share market, but we'll wait and see, as always, what happens in the next couple of days. But we do have to remember that there's always a bull market somewhere. We're seeing very strong gains this week in travel-related stocks, as you would expect. SiteMinder, which is the world's largest hotel platform, their shares are up 10% this week. A toll road operator, Transurban, they generally do well around this time of year, of course, because traffic is increasing, and Transurban operates 18 of the 22 toll roads across Australia, and Transurban shares are up 6% this week. That is something to consider. Last but definitely not least, let's have a big pause on critical minerals and battery metals. They're in the limelight for many reasons, so just bear with me. Pilbara Minerals, they're Australia's biggest lithium company. Their shares hit a brand new multi-year low yesterday. The technical indicators suggest that they could be oversold and maybe start to see some bites and nibbles and push their shares higher, so that's worth watching. But do keep an eye on the pin-up ETF down under, that is the ACDC ETF. This is worth watching. I guess it's a gauge of EV stocks or stocks in the EV industry, and I think that they could gain considerable traction and legs this or next year. Why is that? Well, not only because we're expected to see the EV limelight shone here in Australia with the federal election in Australia, but also consider that Tesla's battery maker and the world's biggest battery maker, Cattle, is now seeking to list on Hong Kong Stock Exchange and raise $5 billion. That basically means that ACDC should be on your radar to perhaps watch. Why? Well, basically EV stocks will probably become front and center because Cattle should be able to develop batteries at a quicker pace, meaning you'd be expecting the world's leader in fast batteries. They're already charging batteries in under 5 minutes for EVs, but you could expect them to quicken that again. You could also expect maybe Cattle to enable batteries to go greater distances as well. So this basically means that Tesla, VW, BYD might be able to drop their prices of their EVs, remembering that EV batteries are the most expensive part of an EV. They account 30% of an EV's price. So this is a win for consumers. If we do see Cattle come onto the Hong Kong market and see more buying, then that would be a great, I guess, green light to expect more innovation in the EV industry. So EVs of the future could be going greater distances, be a lot cheaper and require a lot less charging. So the future is indeed looking bright. And that's our very last daily for 2024. Thank you so much for your company. From everyone here at Moomoo. For any information on stocks we've covered today or throughout this year, head over to Moomoo's app. But we do look forward to seeing you back on deck when we're back on January 8. Bye for now.